And Industrial Solutions joining into the show right now. Amar, great to have you on ET now. Thanks for your time. Just going through your earnings and, while the numbers look very strong, I want to specifically talk about individual segments. And let me start off with what's really happening within the power system segment for you, because that's where you've seen a sharp sales surge. Tell me, what were the key market drivers and whether you expect to sustain this kind of high growth rate?
Yeah, thank you. Thanks for having me here. And you're right. I think digging down into the results is always helpful. So power sector, I think it's booming. The good thing is the tide is towards our side, and I don't see this going down even for next couple of years. And that's the reason why we are making investments, building on the technology. And I think the momentum is going to continue for a long time, and not only in India but globally as well.
Amar, this is Harsha. Good morning. Amar, hi. With regard to industrials, margins have come under pressure, right? Not looking pretty. What's happening there? Can there be a recovery at play at some point?
Absolutely. And I think if you guys have heard yesterday in the earnings call, I said I'm not too concerned right now between industrial. If you see, the big two areas are railways and the motors business. Motors is now on back. I think last quarter it hit the bottom and it's continuously going up. Although we don't declare exact results or the numbers of the segment, but to give you an idea, the market was flat for the industrial segment, but the bookings or the order intake was in double digits. And also the sales was positive, single digit, but it was positive, so which is good. So we are gaining on the market share for the motors piece of business. And coming to the railways, the impact that came on the results was primarily for railways because there was a delay in deliveries because of various issues. So almost for a month or so, we were not able to make the shipments, which commenced from 15th of September. So whatever we could ship was only 15 days time that we had there. So all that is only a lift and shift that's going to get between the two places. So it's a momentary between the quarter that we saw this.
Sure. So, but Amar, despite the short-term deferments, tell me what's the long-term growth outlook for the railway division, especially considering the opportunities like Vande Bharat, Vande Sadharan, metro propulsion systems, etc., and the recent partnership for the US railway sector as well.
Absolutely. I think the segment itself is pretty phenomenal opportunities there. So what we are focusing on are two things. One is the technology development, and second is the relationship development to enhance and speed up our development. So a couple of things. One, there's huge opportunity within India, and that's what we are doing. Right from our railway system, we are also into Kavach. That's the company we acquired last year. I think hopefully by December, they should commence there, get the approvals and start the shipments. So you're expanding the portfolio of the whole, right from propulsion to at some stage, make sure that we are increasing our share into the Vande Bharats and Sadharan Bharat as well. For the global markets, yes, we even tied up because one of the requirement of these large rail companies in US is you have to have service set up. And if I would have gone organically, it would have taken me a couple of years to do that. And that's why we entered into a partnership to make sure even if there's a concern, there's somebody available for service at the drop of a hat. So I think that is also happening. I was in US a couple of weeks back, and I think very good meetings. So even though tariff issue is there, but then again, it doesn't dislodge us from doing the real business. There are a couple of more markets that we are looking at. So I'm pretty positive in the long term for railway business as well, and that's why it is there.
How is inventory and how is receivables clearing up for you? You've done a 3,000 crore fundraise. Congratulations on that. But what's happening on the working capital side of things? And is there some optimization at play there? How quickly can that unwind?
So I think it's a good story to have money in the bank, so which is good. So we have our own internal accruals as well as what we got from the QIP. So you'll see more. One is yesterday, like we made the announcement of almost close to 800 crores new expansion for our switchgear facility for the power. So hopefully that should come up very soon. And then, of course, we are looking at a strong candidates pipeline for the M&A or JVs or partnerships for our semiconductor business as well, because that requires a lot of investment at that stage. And for semiconductors, if you don't make that investment right from design capability to OSAT and cover the whole spectrum, then 5 years, 10 years down the line, you won't see. You cannot be that in the big league. So more to come on that. Stay tuned.
Okay, and so give us a sense on full year, therefore. How do you shape up? You've done very well H1, mind you. Does full year guidance stand? 20% kind of growth, given the very, very strong ordering and the kind of book that you sit on?
Generally, I say future is bright. H1, yes, we are done very strong, but is that the end of it? No. Can we do better? Absolutely. Guidance, we don't give the guidance of where we will end up, but yes, I can say that future is bright because we have strong pipeline, execution excellence that we have as a tool or the vehicle to drive things. I think the entire team of CG Power is really embracing that. So we have a consistent process. So I'm very, very confident on the team that can deliver these results.
When does that revenue start to kick in for you? I believe end of FY26, your facility gets set up. Thereafter, would you start to see that also flow through in terms of the top line margins and the like?
Do you mean for CG Semi, for OSAT?
Yes, for OSAT, please. Yes.
Yeah, OSAT will be next year only, although
Yes.
we have already got the samples, but as you know, the lead time for sample submission and approval takes about 6 months or so. But if you see the other side of the business that we have, X0, which is our design company for radio frequency, that revenue has already started coming in. And hopefully this year itself, we should do close to $50 million, which is about 450 crores or so.
In US, what's the sense like? Of course, you derive some part of your revenue from the US. Any risk, tariff and the like, does it pose a headwind for you at all?
I think we are fortunate enough to not have those headwinds,
Sure.
although the content of US is not so big.
Yeah.
And wherever we have, of course, because we got some decent, good orders from there, most of the input terms are X works, so it doesn't really impact us. And I think customers, whatever we are speaking to customers, they are very, very accommodative to wait through this tariff issue till it gets resolved, which obviously we don't control. So I don't see any headwinds for CG Power on that.
Sure. And this 10 to 20% jump in terms of the mix that you're targeting, export versus domestic, right? So export currently is 10% for viewer context. The goal is to get it to 20. Two pieces here. One, will US play the dominant role with regard to exports, or will Middle East be the target market? Give us a sense there. And are your export margins materially better? I'm not so sure, because when I was reading up, I didn't exactly get a sense. My sense was that maybe not as good as some of the domestic margins that you make. So give us a sense around both of those.
So couple of answers, because there's no direct answer to that.
Sure.
I think one, it's not 10% exactly of the export of piece. It's less than that. So we still have a long way to go. The opportunity is phenomenal, and till we reach, aspiration is to go to 10-20% of exports, but it's going to take some bit of time, because it's a combination of not only getting the orders from there, which is as part of our go-to-market strategy, but important is how do we bring the capability of the organization, manufacturing capability, to compete with the best in the world. So it's a combination of both, and that's what we are busy in at this point of time. I think in terms of margins, the question that you asked for, definitely export margins are much better than what we get domestically.
Okay, Amar, great to have you on the show, and congratulations once again for the numbers.
Thank you so much.